Hi everyone, my name is Alexandra Tobias, and I apologize for the background. My brother is playing lacrosse in Florida right now, and I am at his game, and it's halftime, so I'm recording this presentation. My project is on PNC Financial Services Group, which is PNC Bank, and also where I work. Looking at the financial services industry as a whole, the financial services industry include companies that specialize in activities such as insurance, lending, investing, and securities tracking and issuance of securities. The financial services industry customers are both retail and commercial customers. The financial services industry stocks make up one of the largest portions of the S&P 500. The financial services industry benefits from improving economic conditions and also can be significantly tampered in bad economic conditions. Some of the positive factors that affect the financial sector include rising interest rates on a moderate basis, reducing regulation, and helping customers with finances. Some of the negative factors affecting this sector include rapidly increasing interest rates and a flattening yield curve. Some of the history of PNC. As most of you probably know, PNC is headquartered in Pittsburgh, Pennsylvania. We operate in 19 states and in Washington, D.C. PNC has 2,459 branches and 9,051 ATMs. PNC consists of asset management, wealth management, estate planning, loan servicing, and information processing services, as well as many others. PNC has approximately $292 billion in assets under management. PNC offers credit cards, mortgages, student and auto loans, among others. PNC is actually the result of a merger in 1983 between two large Pennsylvania banks, which were Pittsburgh National Corporation and Provident National Corporation. Pittsburgh National was obviously based in Pittsburgh, and Provident was based in Philadelphia. PNC has had many mergers and acquisitions since, some smaller than others. One of the biggest and most notable was the acquisition of National City, which occurred in 2005. Looking at the SWOT analysis for PNC, as one of the leading financial institutions in the industry, PNC has many strengths. Some of the strengths include product innovation. PNC has a successful track record of implementing new products. Also the integration of a number of technology companies as complementary firms through mergers and acquisitions. These tech companies have helped PNC streamline their operations and build a more broad supply chain. PNC also invests a large amount of money in the training and development of its employees, which I can vouch for, which results in a highly skilled and motivated workforce compared to a lot of competitors. PNC has been successful in building new revenue streams by effectively introducing new products and receiving good returns on capital from those products. PNC also has successful go-to-market strategies for its products. PNC also has high customer satisfaction. They have a dedicated office of the customer, which has been able to obtain high levels of satisfaction with existing customers and good brand equity among potential customers. Also, the automation of activities has brought consistency of quality to PNC's products. PNC also has a strong dealer community. Some of the weaknesses of PNC include difficulty integrating larger companies into the work culture. This can be seen with the National City acquisition. PNC also needs more investment in new technologies, with competitors rapidly coming out with new technology, new apps, new ways of doing banking. PNC needs to keep up with that. PNC's marketing and products could also be improved, and also PNC has opportunities which include entering new emerging markets, which can be seen. We just recently entered into the Nashville and Denver markets, which is new territory for PNC. New tax laws will also help increase PNC's profitability with the Trump tax plan from 2016. The lower inflation rate brings more stability to the market and enables credit being given at lower prices to customers. Also, the decreasing cost of transportation, which means lower shipping costs and more money for PNC to invest internally or pass the benefits on to its customers. Also, market development will lead to the dilution of the competitor's advantage. After years of recession and slow growth, the strong economy has led to an increase in consumer spending and is an opportunity for PNC to increase its market share. PNC also has a lot of free cash flow, which allows for additional investments. Some of the threats for PNC include their operations in other countries, so exposure to currency fluctuations, also the imitation of counterfeit and low-quality products, especially in the lower-income markets when you look at places such as, some of the smaller loan companies. New technologies developed by competitors, as well as lawsuits always for banks, are a threat, and the shortage of skilled workers in the global market as more, people go to trade schools and things like that. Some of PNC's competitors, I won't read them off, you can see the list, but BNY Mellon, SunTrust, and Bank of America are three of them. Looking at PNC's financials for the fiscal year ended December 31st, 2018, PNC Financial Services Group, Inc. had interest income increase 16% to $12.58 billion. Net interest income after loan loss provision increased 7% to $9.31 billion. Net income applicable to common stockholders, excluding extraordinary items, increased 30% to $5.4 billion. Net interest income after loan loss provision reflects net interest margin. Analysis of PNC. PNC is in a strong position long-term due to its consistent operating history in its 5 segments and growing long-term products, including acquisitions, expansion into new markets, and environmentally friendly business practices. PNC's 20% ownership stake in BlackRock provides diversification to its portfolio of services and makes it unique to its competitors. Since the financial crisis, PNC has transformed itself with the integration of the struggling national city, which doubled the size of PNC, the acquisition of RBC's U.S. branch network in the Southeast, and by updating its core infrastructure and retail branch model. PNC has had success in organically expanding its customer base, largely in commercial banking. Growth in fee income, deposit, and loans can be attributed to PNC's expanding client base. Non-interest income makes up about 40% of PNC's net revenue. PNC has also been successful in selling new products in RBC's branch network. PNC has also expanded commercial banking growth into the Midwest markets, which seems to be working for them. PNC has begun retail expansion in the same areas where commercial banking has seen success. As I mentioned before, PNC expanded to Houston, Nashville, and Denver in 2018 and plans to expand into Boston and Phoenix this year. PNC has solid growth history and potential. In addition to a solid credit history, PNC has successfully executed on many expense-saving initiatives over the year, and many of these funds are being put back into the company in the form of technology investments. PNC's focus on technology, its branch network, and its history of prudent and conservative lending will lead them to continued success. You can see PNC's mission and strategy here. Again, I won't read it off. According to PNC's end-of-year earnings call for the end of 2018, the 2019 goals include establishing new customer relationships, deepen the relationships with existing customers, continue the path of risk and expense management, and continuing to advance technology. PNC has 3 core business lines, which include asset management group, corporate and institutional banking, and retail banking. PNC's primary capital management goal is to maintain the strong position that we currently have. PNC is primarily funded by deposits from both its retail and commercial customers. PNC also obtains liquidity through lending, and those liquid assets are also used to maintain PNC's liquidity position. PNC uses a variety of derivative products as part of its overall plan for asset and liability management to help manage its exposure to the interest rate market and credit risk common in these business practices. PNC seeks to mitigate counterparty credit risk by entering into transactions with only high-quality institutions, establishing credit limits, and generally requiring bilateral netting and collateral agreements. PNC has limited foreign exposure, with most employees being located in the United States. About 114 employees only are located outside of the United States. Our foreign branches are in Canada, the UK, as well as the Bahamas. PNC's corporate governance structure includes an executive committee who's responsible for developing an enterprise-wide strategy and achieving PNC's strategic objectives and providing strategic oversight with respect to PNC's resolution plan. Also an executive sponsor, the CFO serves as the executive sponsor, as well as the planning steering committee, who's responsible for overseeing the development and the submission of the resolution plan. 5 forces analysis for PNC. Threats of new entrants. New entrants in the banking industry bring innovation and new ways of doing things. These new entrants can obviously put pressure on PNC through lower pricing strategies, new value propositions to the customers, etc. PNC can mitigate the threats by innovating new products and services. The bargaining power of suppliers. Most of the companies in the banking industry buy their raw material from the same numerous suppliers. Suppliers in the dominant positions can obviously increase their markets or their margins. Bargaining power of buyers. Buyers can be very demanding, especially customers with as far as their money goes. Customers want the best products at the lowest price. Threat of substitutes. Industry profitability can suffer when a new product or service meets a customer's needs in different ways, and value propositions go along with that. And then rivalry among existing competitors. If this is intense, it can obviously drive down prices and decrease the overall profitability. Key issue that I found in looking at PNC is the changing branch system. Branches obviously are becoming a thing of the past. The overall number of branches in America has been on the decrease the past few years. Customer experience is key moving forward. PNC needs to look at their branches and recognize that some clients and customers still want the hands-on experience that a branch offers with tellers and things like that, while other customers, especially the millennials, are looking to only use apps and quick ways of doing their banking. So a balance between those two is crucial moving forward, to not only offer branch services that have been offered in the past for the legacy clients, but also offering, technology for the future as far as apps. PNC has some branches of the future that you could see if you go to like the Peters Township branch, for example. They have a lot of iPads and only a few tellers. That looks like it's going to be what it is moving forward, and I think that PNC needs to do a good job of balancing that. That's all. Thank you.